policymakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua here in London this morning. Now let's get to our top geopolitical story. Chinese President Xi Jinping says the Shanghai Cooperation Organization is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomed international leaders, including India's Narendra Modi and Russia's Vladimir Putin, to the summit in Tianjin.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
Bloomberg's Min Min Lo is on the ground for us at the meeting in Tianjin, and she joins us now. So I want to ask what's happening today. I think a lot of the day has already passed where you are, Min Min. So we've seen meetings over the weekend taking place between China and India. And then today, I think the big sort of headline meeting between India and Russia. What have we learned so far?
Yes, the key highlight today is certainly the meeting between Modi and Putin. But before that, I just want to show you what's the headline on China Daily, Chinese state media. You can see here, SCO charts a course for a shared future. This was yesterday's paper, and this one says Xi's SCO plays a key role in safeguarding peace. And this is really a platform for President Xi to show you that he really has global leadership here, especially over some of these countries of the global south, with more than 20 leaders around the world here in China, and around 10 heads of international organizations here as well. But back to the bilateral meeting, we have Modi and Putin meeting today. It just concluded, and Modi is saying in the opening remarks that Russia and India have a very special, privileged relationship that has withstood the test of difficult times. And he just said that the meeting was excellent. They talked about improving and deepening bilateral ties on all sectors, including trade, space, cultural, security, fertilizers, really quite a wide-ranging talk, it seems. And both leaders sat in the same car on the way to the bilateral venue. They hugged each other. It really shows you the close ties between the two sides, perhaps even more so because of President Trump imposing these additional 25% tariffs on India and really pushing India to look for other allies and partners in the region. Today as well, the India's energy minister defending the country's actions in buying Russian oil, saying it is within international norms, it is within the price cap mechanism imposed by the G7 as well.
Yes, they say they've had mixed signals from the White House as to what the US wants them to do when it comes to oil. We've also seen then over the weekend, taking a step back, Min Min, we've seen this meeting between President Xi and the Indian Prime Minister Narendra Modi. Now, these two nations, there's been friction between them on a number of fronts of late, and they seem to be coming closer together, patching up their differences, but surely not agreeing on everything. What have we heard?
Yeah, certainly it seems like China is really on this charm offensive, trying to get India to tilt more towards China, united by this common mission to counter the impact of Trump's tariffs. So yesterday, when Modi met with Xi, he announced that both sides will be looking to resume direct flights that have been suspended since the COVID-19 pandemic. And certainly the rhetoric coming out of China is very markedly different from the time in 2020 when both sides were engaged in deadly border clashes along the Himalayan border. And this time, China is saying, or describing the relationship as one of the dragon and the elephant tangoing together. And it looks like, the two sides are really trying to come closer together, although Modi is also balancing a very difficult balancing act here because he's going to be absent from the military parade happening on Wednesday. He's not going to be standing alongside President Xi and Putin and Kim Jong-un. That's not a good look for him, given India prides itself as the world's largest democracy. So he doesn't want to be seen alongside these autocratic leaders. But still, again, it's President Trump sort of pushing these different countries to come together closer. And this has been billed as the largest SCO gathering in its history so far.
Yep, Min Min, thank you very much. Bloomberg's Min Min Lo at that event in Tianjin as China tries to project a bigger image on the global stage then. Let us turn to the tariff agenda of the Trump administration. America's trading partners have been left scratching their heads after President Trump's global tariffs were found to be illegal by a US appeals court on Friday. Bloomberg's trade czar Brendan Murray is here to help us understand all of this. Brendan, thank you very much. So we've seen a number of legal challenges to what President Trump has been trying to do over tariffs in recent months. Has this one moved the dial? What have we learned?
Well, we've seen so many twists and turns over the past 7 months in this trade war that President Trump is directed at a number of trading partners. And I'm afraid that we're in for another several months of uncertainty as we try to figure out what the next steps from the Trump administration are going to be. Will they take it immediately to the Supreme Court? Will they defer to this lower court and see if the case could be narrowed? Or will they start rolling out more of these sectoral tariffs that are sort of in the pipeline? They've already got, have the tariffs on steel and aluminum and on cars. Those are not affected by this court ruling, nor will those on pharmaceuticals, chips, other sectors that they can target with tariffs. So it's always been understood inside the administration that this quick approach, the reciprocal tariffs, the Liberation Day press conference, untested in the courts, would be risky and could eventually be struck down in the courts, and that's sort of where we're headed. But in the meantime, on this other track, they have sectoral tariffs that they can target to accomplish much of what they want to in raising revenue and reshoring manufacturing production back in the U.S.
So perhaps that's why markets seem kind of calm in the face of all of this. The fact that, as you say, there might be other ways that the Trump administration can bring about the same effect and generate some tariff revenue, even if this current method is in question legally. Let me ask you about evidence of the damage that tariffs are doing to certain parts of the global economy. We seem to have seen some evidence out of Canada, for example, over the weekend, that their economy is shrinking as a result of what tariffs are doing to exports.
Yeah, exactly. The effects are slow, but as companies' profit margins shrink and they look for ways to raise prices where they can or ask suppliers to take some of the hit for them, that impact starts to sort of play out. It doesn't happen right away. We talk to small businesses fairly regularly, and they say these are killing us. We can't survive in the long term if we have to pay an extra 30% or an extra 50%. We had the end of the de minimis exemption on Friday. A lot of small businesses around the world use that to trade between countries, and so all of this is kind of happening at once, and none of it seems to be lifting the cloud of uncertainty that businesses need to plan ahead and to run their businesses efficiently, and it just leads to it just winds up as an economic headwind in the broader scheme of things.
Yes, because there's the impact directly on exports, Canadian exports falling by 27% on an annualized basis, but then there's the sort of chilling effect on investment and business investment contracting by some 10% in Canada. So, Brendan, thank you very much. Thanks for bringing us the latest data there. Bloomberg's Brendan Murray telling us all things trade. Now, of course, we'll keep an eye on the latest developments around the trade agenda, but other things in focus for us: the jobs report on Friday, key inflation data, that's from the Eurozone tomorrow, and the Fed's next rate decision, that's next week. All of these things are going to be hitting markets in the next 14 trading sessions, so it's going to be a busy start to September. It means over the next few weeks we should get a clear reading on whether the stock rally can continue. So with us to discuss, Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Laura, really nice to have you with us. September is typically a challenging month for stocks. Is this year going to be any different?
I don't think this year is going to be any different. Yes, we have the seasonal headwinds that we typically see, but as well, to your point, there's a number of key, crucial economic data that we'll be watching for. Most notably is the payrolls print this week. That's likely to be a make or break, not so much for the September cut, but really markets extrapolating the Fed policy path further out of cuts. And then, to your point, we have the CPI next week as well. Will we see signs of more material tariff impact? Could that be kind of a game changer for market pricing? And then, of course, all of that leads up to that September 17th rate decision where, 25 basis points is certainly expected. But what could the Fed signal for the path forward? And that's going to be crucial for stock markets.
Yes, crucial for stock markets. And we have not seen very much volatility of late, Laura. So the VIX has rarely been above 20 over the last 3 months, which suggests everyone's had a very chilled, relaxed out summer. And we're not too concerned about the path ahead. Is there too much complacency out there, do you think?
I certainly think that is the case. I mean, looking at hedge funds kind of betting on shorting the VIX at the most that we've seen in 3 years really does suggest that they expect this calm to persist. I think we expect greater volatility if we do see some of this economic data materially surprise to the upside or the downside, just given that equities have really been predicated on the Fed easing coming through quite materially. We have about 5 rate cuts priced in by the July meeting. And this is occurring against a backdrop where the inflation uncertainty still remains kind of unknown. Because if we think about, yes, we're starting to see goods inflation that's expected to grind higher over the coming months. But last month, the supercore inflation measure is actually what surprised to the upside. If we start to see signs of services inflation reaccelerating or wages accelerating, I think that could put, some cold water on some of these expectations for Fed market easing bets.
Yes, and so let's think about where we might be by Friday, or what Friday's payrolls report might tell us, Laura, because do you think this is going to have a real bearing on September rate cut expectations? Or is it going to be more about the medium term? Because after we heard from Jerome Powell at Jackson Hole, we increased expectations of a Fed rate cut in September. And the market's probably quite attached to those expectations because of what we heard from the chairman. So is it that's going to be the focus for markets? Or is it going to be all those other rate cuts that the market has priced in?
I think it's going to be a combination of both. And I think to your point around will the payrolls really be the determining factor for the September 17th Fed cut? I think it depends on the magnitude of the miss or the beat that comes through. I think last month's payrolls told us that the labor market is on much more precarious footing given the significant downward revisions. So if we do see a meaningful upside surprise, perhaps then that will start to question whether the Fed will be in a position to cut beyond that September rate cut, which market's pricing in about 88%, because the Fed doesn't want to necessarily cut into, still hot economy. There's certainly implications on the back of that. But if we do see a material miss to the downside, perhaps then we're going to see not just a 25 basis point cut priced in for September, but perhaps that 50-25 debate will come back to the focus. Because if we look when they last surprised with 50 basis points, what preceded that was really 3 consecutive months of weak payrolls print. So as well as the payrolls print, I think it's a number of the key labor market indicators as well this week to watch for that could guide that September cut and further out, because there is this greater scrutiny, certainly on that payrolls data more recently. Yes.
And so are you expecting, given the way that payrolls reports have gone recently, are you expecting this one to be another one that disappoints? We've seen over the past couple of months, it was the revisions and the fact that we thought we had jobs that then turned out not to be there. That was the thing that sort of disappointed and spooked markets.
Well, our expectation is that we're fairly in line with consensus that we could see 100,000 job gains in August. But we'll be watching for the more stable metric around the unemployment rate. Right now, 4.2%. If it were to go to 4.4%, I think in this backdrop where there's supply constraints coming through from immigration restrictions, the Fed is really closely monitoring this key gauge. And I think that could really be what to watch for to guide markets. But as well, look to, the ADP print this week. That's probably going to have disproportionate importance given the scrutiny on the BLS data. And if we look at, given the revisions, the ADP print has actually been a more accurate gauge than historically it has been. So maybe market attention will turn there.
Okay, yes, that's interesting, because often some people say, the ADP is not a great indicator, but as you're suggesting, maybe the lacking data elsewhere means that we'll turn to it more. And what does all that mean for risk appetite then, Laura? Where does that take us?
I think overall the economic fundamentals still remain supportive enough to support the U.S. equity markets in particular. I think there were some key themes that we drew out of the earnings season, most notably the number of companies who reported positive guidance certainly surpassed historical averages and was about double what we saw last quarter. And unusually, what we're seeing is that earnings are actually being revised higher, whereas historically at this time of the year, they're being revised lower. So a lot of that low-hanging fruit perhaps has already kind of been embedded in market prices. But unless unless there's a material shock that derails some of the Fed pricing, I think we're still going to see equities grind higher. We still have our S&P 500 target around 6,600 so far this year. It's really just being about very selective across sectors, in particular in equities. And maybe now is still a great time for that regional diversification. Still in Europe and pockets elsewhere.
Okay, so we're at 64.60 on the S&P right now. Of course, no trade today, Labor Day. So you obviously see some upside there. Are the gains going to be good in the US versus the rest of the world? I mean, I was looking at China. The CSI 300 had a really good run in August. Are we looking more broadly, globally, for gains, given how far US tech in particular has run?
I think it's about a combination of factors. I mean, certainly the China tech upswing has been quite surprising in July and August. And there's a number of factors behind that. We can see the PBOC did inject fresh liquidity. We see valuations are still relatively cheap. And as well, the government is extending this campaign to try to kind of reduce pricing reductions and competition within the space. So all of those factors suggest that China tech can continue on this upward advance. But then U.S. tech, it's stumbled more recently. But if we look at earnings expectations, if we look at the free cash flows that are emerging from, let's say, 6 of the 7 magnificent 7, they're quite strong. We think that's going to be supportive backdrop to continue to have tech in the U.S. as that key market leadership. And then in Europe, we are seeing some signs of improvement on the growth front. We're still quite constructive. But really, Europe is more of a bifurcated market, lots of dispersion. So we think it's really a stock selector's time.
Okay, Laura, thank you very much. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. We started this hour talking about what's been going on in Tianjin at the that Shanghai Dialogue, Shanghai Cooperation Organization, being run by the Chinese, of course. And President Xi is speaking at a grouping at that meeting. It's called the SCO Plus meeting. He's saying that global governance has come to new crossroads. He's also proposing a new global governance initiative. So he continues to monitor the outreach from China to other regional powers at these meetings. Coming up on the programme, we'll turn to French politics. Francois Bayrou strikes a combative tone as he battles to survive as French Prime Minister. We'll have details next. This is Bloomberg. Welcome back. This is The Pulse. Let's get more on the political turmoil in France. Prime Minister Francois Bayrou has told reporters he isn't sure that a compromise is possible in talks with opposition parties this week. Those remarks came a week before legislators hold a confidence vote in his government. Let's bring in Alan Katz, Bloomberg's Paris bureau chief. So we've had more days over the weekend, Alan, of the Prime Minister saying there is a path forward, I can do this, I can win this confidence vote, and all the opposition saying, well, we're not going to vote for you. So where does this look as if it's heading?
So, I mean, Bayrou definitely seems more optimistic than most. I mean, pretty much everybody else gives him very little chance of surviving this. As you said, even he last night said, compromise is a beautiful term, but I'm not sure that it's reachable in this instance. Those comments came after both the head of the Socialist Party earlier on Sunday and the president of the National Rally, the far-right National Rally on Saturday, had said they absolutely weren't going to support his confidence motion. We're definitely going to vote against him. And if he doesn't get at least one of those two to flip, or at least be willing to abstain, then he seems almost certain to be forced to resign a week from today. So it's hard to see how he makes it through this, and it's hard to see too whether his optimism is deeply felt or if he feels he just needs to sort of put on a front between now and next week. It seems really overly optimistic, to put it that way.
Right. Yes, so maybe that's his own, overly optimistic reading, Alan, of his own prospects. So if he does not last, if he's not Prime Minister just over a week from now, then we just look ahead to a new Prime Minister, do we? And will we be still faced with exactly the same political maths within the Assembly and the same problems for a new Prime Minister?
So largely, yes, we will be faced with exactly the same problems. Now, if he's forced to resign, Macron, then it's then up to French President Emmanuel Macron to decide what to do. And he has a few choices, one of which is to name a new prime minister. And that person could even be Francois Bayrou again, though that doesn't appear to be likely. But he could name a new prime minister. That new prime minister, as you say, would have exactly the same issues with a completely divided parliament. It would be very difficult to think of anyone who might be able to assemble a coalition large enough to really get anything through, including a budget, and that's the one sort of must-pass bill that you have in France. But that is what most observers think is the most likely outcome. The other thing that Macron could do, or one other thing he could do, is dissolve parliament and call parliamentary elections again. He did that last June. That didn't turn out very well for his party. They lost a lot of ground, really to the both to the socialists and to the far-right National Rally, which the National Rally became the biggest single party in the National Assembly. So that seems to be something that Macron is not inclined to do. But again, as you point out, like, how does he find someone who, in just naming a new prime minister, who could actually sort of muddle through for the next year and a half? Because don't forget, Macron's term runs until early 2027. So we have quite some time until there'd be sort of a big presidential election to really change the political dynamic in France.
Alan, thank you very much. Bloomberg's Alan Katz with the latest on French politics. From France to Germany, the German Chancellor Friedrich Merz has warned that he sees the war in Ukraine dragging on with no clear end in sight. Speaking on German TV, Merz said he hasn't given up hope that a ceasefire can be secured, but he says he's, quote, not under any illusions either. Greg Sullivan, our Russia economy and government editor, is here with his assessment of where this takes us. A pretty negative assessment then from the German Chancellor, Greg. I mean, is this a surprise? This would be the assumption, I suppose, amongst many European leaders.
Yes, negative, but potentially clear-eyed. We've seen that both sides have held successive rounds of talks, but those haven't produced a ceasefire. Instead, they've largely just resulted in prisoner exchanges between the two sides. Putin has stuck to maximalist demands that Ukraine is unlikely to accept to reach an end to the conflict, and the Kremlin has really shown no sign of wanting to end the fighting, short of a Ukrainian surrender. And Ukraine is, at this point, not likely to do that because they see this as an existential conflict, and they've been very clear that they do not want to cede sovereignty to the aggressor. So at this point, it does not look like a ceasefire is on the horizon, despite the push towards one. Things could always change, but for now, it seems like a rather clear-eyed assessment from Merz.
Yeah, so we don't see much progress then on the Ukraine agenda. Meanwhile, Merz and President Macron of France have renewed their calls then for secondary sanctions against Russia. How likely are they at this stage?
Well, it's interesting because historically they've resisted this idea of secondary sanctions, but in some regards this could be read as an admission that the current direct sanctions on Russia just don't have the same sort of leverage that they feel they need to force President Putin to the table to negotiate a ceasefire. So here they are calling for secondary sanctions to both make those more effective and ramp up the pressure on Putin. It's also a move to try to prod the U.S. to step up to the table. Trump has warned that there would be an economic war and bad consequences for Russia if the fighting continued. But so far, he's been reluctant to impose sanctions on Russia or impose new penalties. And so maybe this is a prod from the Europeans in that regard to try to ramp up the pressure on Russia amid these negotiations.
Greg, thank you very much. Greg Sullivan, our Russia economy and government editor. Thank you for bringing us the latest on Ukraine. A quick look at what we have on European equity markets right now then. It is the 1st of September. No trading in the United States. We are up by 0.4% on the Stoxx 600 right now. We see some positivity coming through on the healthcare space, for example. Coming up on the programme, we'll get back to some of that geopolitics. Hellos and handshakes as Chinese President Xi meets India's Narendra Modi and Russia's Vladimir Putin at a summit in China. We'll discuss what it means for global trade and security next. This is Bloomberg. Welcome back. Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The leaders of China, India and Russia meet in China as they seek to strengthen ties amid trade tensions with the United States. Tariff uncertainty. Washington considers its next move after an appeals court declares President Trump's global tariffs illegal. Plus, OpenAI aims to build a massive new data center in India that could mark a major step forward for its AI infrastructure push. Welcome back to the programme. Let's return to our top story this morning, and that is the events taking place at the Shanghai Cooperation Organization meeting in Tianjin. Chinese President Xi has welcomed world leaders, including India's Narendra Modi and Russia's Vladimir Putin, as they discuss trade and security. With us to discuss the impact of this meeting, this grouping, Francesca Ghiretti, who's the Europe-China Initiative Director at RAND. Very nice to have you with us, Francesca. Thanks for being with us. So what do you think China is trying to get out of this meeting? What are the aims of this?
There are a couple of things that I think China and Russia together are trying to get out of this, which is, and they've explicitly said so, is a new world view, is a new world system organization view. Now, I would, however, be very cautious about the fact this is not the first time China tries to put out there a new world system, right? They had the Global Security Initiative, the Global Development Initiative, they had the Belt and Road Initiative before that. So this is definitely not the first time that this happens. However, the fact that the United States has taken the position it's taken, the fact that it's somewhat alienating the allies, does feel like it is creating a situation where China and Russia potentially they can propose something more assertively to partners, because there's a need for multilateralism, which is not being filled by other countries.
Yes, and you make this point in your notes ahead of our conversation, that it is important in itself that these countries, some of them run by very authoritarian leaders, they still want to operate in a multilateral environment. I mean, is that the case, Francesca, or is it just that's the image that they want to create?
I think it's a bit of both, right? It is indeed the case that a lot of countries, not necessarily Russia and China, want to operate in a multilateral environment, but it's also the case that these two want to have a multilateral backing. They do want to be part of a system that can support their aims and their goals, and they want to have backing in the image that they're actually much more supported than the so-called West.
So if we dive into some of the relationships that are on display here, and we've got China and India coming closer together as a result of these events, and in the run-up to them, in fact. What do you make of the warmth of the relationship there? Is warmth too strong a word? Is this something more tactical?
I think warmth is too strong of a word. The two of them keep having some very deep security issue. Their trust is not necessarily there. Modi has complained about the trade deficit that India has with China, and considering how China's economy is doing and the structural issue that it has, especially the export-driven, the need to export more. I'm not sure the trade deficit issue will be solved. However, India does want to have a successful economy, and at the moment, because of the potential 50% tariffs from the United States, China looks like a potential positive partner economically. However, I would definitely not see this as the beginning of an alliance or a partnership, but nothing like that.
Yes, I mean, India is a democracy. What do you think the India is, the thinking is in New Delhi about how close to get to this kind of grouping?
Well, they did apply for membership, so they're interested in a grouping that brings together Eurasia countries, right? So India is part of Asia, so rightfully so, rather than leaving everything to China and Russia for the decision around the SCO, they applied for membership. So they're interested in steering the direction of the group in a certain way, and that in itself, I think, is important.
Yeah, and you mentioned the tariffs that the Trump administration has imposed on India. To what extent do we see the influence of America in this room, in this grouping, even though America is clearly not there? But the fact that they all have something in common. They have Trump and his tariff agenda to contend with.
I mean, let's put it very bluntly. If it weren't for the view towards the United States, probably China and Russia wouldn't even be partnered to begin with, right? Is this idea that they have to fight against the so-called West that creates the relationship between the two of them. On top of that, if you layer the fact that now the Trump administration is imposing tariffs on partners, allies, and so on and so forth, as I said before, this creates a window of opportunity for a country like China and Russia to propose propose themselves, especially China, as responsible global actors to a lot of middle-income, lower-income countries that just want to have a good and solid economy.
Yes. And what about the oil relationship, the energy relationship, rather, between India and Russia? So India buys a lot of its energy from Russia, and the current US administration, Peter Navarro in particular with the trade brief, has been very critical of this, almost laying the blame for the war in Ukraine at India's door, because they're saying that India is bankrolling Russia in its war in Ukraine. But India pushes back and says we've had mixed signals from the Trump regime, and actually we're buying in accordance with the G7 minimum price and all of the complex rules that were put in place there. I mean, does India have a point? What's the future of this conversation, do you think?
So we talked about India-China, right? And I told you that I don't think that the relationship is particularly warm and that there are a lot of issues there. India-Russia, however, we've seen their relationship being relatively close. Not really a partnership, but definitely there's an ongoing relationship between the two of them in terms of oil, but there's also an history of weapons from Russia being sold to India. So I suppose that there's a bit of narrative coming out from New Delhi in terms of to be able to maintain this relationship and a bit of truth. The reality is, however, at the SCO, if I were to, identify one bilateral relationship that seemed particularly warm, that is definitely the one between India and Russia.
That's interesting, because I was reading that Narendra Modi did speak to Volodymyr Zelensky before attending this event, and that makes you wonder if any progress can be made, any pressure applied to Russia when it comes to its actions in Ukraine. I suppose that would be a lot to hope for from this event.
Absolutely. I'm not sure New Delhi has the means to apply pressure on Moscow to begin with. But otherwise, I don't think that India is necessarily siding with... India is not siding with Moscow, right? It just is a position where his interests need to be served. And they're served at the same time by buying oil from Russia, while at the same time also saying we need an end to this war, talking to Zelensky and backing the Ukrainian position.
And another thread that you flag as interesting in going into this meeting is what we could learn about Russia and Iran and the Iran nuclear program, something else that we'll be watching for headlines on. Why do we have that expectation that will be addressed?
I think because the Iran and Russia are going or have met at the SCO, right? And we're going to talk about the nuclear programs, especially now that European nations have decided, flagged the possibility to impose sanctions against Iran. And that would bring these countries, who are authoritarian countries, even closer together.
OK, Francesca, thank you very much for your analysis. Francesca Ghiretti, Europe-China Initiative Director at RAND. Now, in other news from the Asian trading day, Indonesian stocks tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the deadly unrest as demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, Prabowo announced Parliament will remove hefty lawmaker perks that had been a source of ire for many protesters. Alibaba shares have surged today after the Chinese e-commerce giant reported a jump in revenue from China's AI boom. The company posted a triple-digit percentage gain in first quarter AI-related product revenue, helping offset a surprise drop in profit. And the Wall Street Journal has also reported that Alibaba has created a chip capable of operating AI services as Nvidia faces hurdles in selling its products into China. Shares in the Chinese EV leader BYD have slumped after it reported a 30% plunge in quarterly profit on Friday. Despite robust overseas sales, BYD's net income for the period fell short of analyst estimates for a modest increase. Heavy discounting saw BYD's gross margin contract as a fierce battle among Chinese car makers hits its bottom line. Coming up on the programme, Parliament returns from recess in the United Kingdom. We'll discuss the challenges facing the government here and look ahead to the upcoming budget. This is Bloomberg. Welcome back to the Pulse. Here in the UK, MPs are returning from their summer break this week with immigration top of the agenda as criticism grows over the Labour government's handling of asylum issues. That's in focus. Plenty more. A reset of communication strategy from Number 10 perhaps as well. Let's talk to Ruth David, Bloomberg's London bureau chief, and John Stepek, author of Bloomberg's Money Distilled newsletter. So there's a lot in the mix this morning. And the bigger picture, I suppose, is it big picture to think 2 months ahead, medium-term view? We're looking ahead to a budget, of course, and that's going to keep everybody guessing for weeks and weeks, no doubt. 2 months of that ahead. So Ruth, just in the short term, though, we've seen quite a lot of news lines just dropping in the last few minutes surrounding a new chief economic advisor in the shape of Manoush Shafiq at Number 10. New comms team in place at Number 10. So do we get a sort of back-to-school, new year starting reset feeling coming through?
Yes, and one can make the case that Nigel Farage has had a better summer than Keir Starmer, arguably speaking. Yes, so Manoush Shafiq, Nin Pandit stepping down. It does seem like the Prime Minister is looking at getting a more economic-focused team in place with the view that the budget is coming up soon. There is this general sense of discontent in the UK public around so many issues, right? We're talking about immigration. We're talking about taxes. In the last few weeks before the summer, before we went back to school, there were all these rumors about, are they going to tax banks more? Is there going to be more property taxes? Is there going to be landlords paying national insurance taxes, right? And this general sense of discontent over the summer, even though yesterday Downing Street officials were apparently swearing to us that there would not be a big cabinet reshuffle, but they've just gone and confirmed Manoush Shafiq now. But I guess they're thinking that's not part
cabinet,
of the, yes,
maybe
that's
it's
not
just,
a ministerial
yes, the advising teams, but a sense of reset then coming through from Number 10, and well they might want to reset, I suppose, after they haven't necessarily been in charge of the narrative over the summer. And John, that narrative, that cost of living conversation still keeps popping up in other media, even though some of I was talking to Callum Pickering at Peel Hunt earlier on today, and he was telling a slightly more positive story about the UK economy, which doesn't necessarily seem to be cutting through in the wider media story. GDP numbers and PMI, okay, they're not going great, but they're perhaps at the upper end of the G7. They were better than expected in some cases, and yet that's not being turned into any kind of positive story and momentum for the government.
I mean, yeah, and Callum's absolutely right. I mean, this has been a persistent issue for the UK for a good few years now. The fundamentals have actually generally been better than expected, even though they're not great. I mean, actually, that probably is part of the problem. It's like they're better than people think, but they're still not amazing.
Yeah.
The other issue is, I guess, well, there's a couple of things. The employment market looks a bit wobbly in various areas, and that partly is down to policy. So whenever the government decided to impose employee national insurance, so they basically hiked the cost of employing people, particularly young people, like by about 20% when you combine it with the minimum wage. So new graduates are having a tough time finding jobs. And then you've also got the fact that with inflation coming in a bit higher than expected, probably going to hit 4% for September, you're going to start seeing headlines about real wages are no longer going to be rising. You've also got the housing market is kind of wobbly.
Yes.
And a lot of people in the UK, their mental balance sheet is based on their UK house price.
It's interesting. I was reminded by Dan Hansen just last week from Bloomberg Economics how the real wage story is positive in the UK. If you look back to 2019, over a longer time period, you can find a positive story to tell about real wages, which, as you say, is something that maybe doesn't always cut through.
Well, I guess it's also the thing that's been propping up consumer spending,
despite
all of the painful bits of governance that we've had. And the question is whether that can continue.
Yeah, and I suppose we're moving towards the budget then, Ruth, and it might be nice that some of the numbers come in better than expected, but we're still talking about a Chancellor with a fiscal black hole to fill, and still the speculation will be about further tax rises then. And we've got 8 weeks perhaps of speculation about tax rises. So where do we start?
Absolutely, anywhere between 40 and 50 billion, depending on who you speak to. But some of the UK media have had these polls that they've had YouGov do for them specifically, saying that both Rachel Reeves and Keir Starmer, right now their popularity is so low. And reform, of course, has been ahead of Labour in the polls, in the opinion polls since April. This week, I think the focus is going to be, there's a reform conference in Birmingham where we've been reporting and others have been reporting that there's a record high in terms of business lobbyists attending. So they definitely are garnering not just public attention, but also business attention. Now, Labour is trying to say, OK, we've got a lot of these childcare initiatives coming through, 30 more hours for nurseries. Anecdotally, and so many others are saying this, they're saying there's more free childcare. Our nursery and many others across the country have just gone and increased fees. So, this sense of discontent and the sense of what is this government doing continues, and it's going to be hard to see how they can change that and what Rachel Reeves can do in the budget to really give herself that fiscal buffer and carry through with it.
We'll see if the narrative can be turned around, if they can get ahead of the communications challenges with the new communications team then coming into place. You mentioned reform, and it seems that this was such a big conversation over the summer that we should not neglect it. We've got a story out over the weekend that says that Labour is going to review changes to the European Convention on Human Rights. And this feeds into a big debate that now exists, it seems, in the UK as to whether it's that legislation that stops the UK doing what it wants to do to stop small boat crossings across the English Channel or not. And the answer to that seems to be elusive.
Home Secretary Yvette Cooper is speaking in the House of Commons today, and she's going to be talking about all of these things. The BBC was reporting this morning that maybe there'll be tighter rules for family members of asylum seekers. It seems like there is a debate within the government about how to proceed with disconnecting from the ECHR and whether really having that disconnect is going to be as effective in stopping immigrants. The other thing to keep in mind, and we've seen some protests around it, is these hotels for asylum seekers, right, which the councils are really going up in arms again. I mean, the government won some legal reprieve last week, but the council might take it to the Supreme Court, and then we see what precedent that sets.
OK, Ruth, thank you very much. Ruth David, Bloomberg's London Bureau Chief, and John Stepek, author of Bloomberg's Money Distilled newsletter. Thank you to both of you for joining us. Now, sticking with the UK, Norway has picked the UK to supply frigates for its navy in a £10 billion deal, the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the United States for the contract. Delivery of the British Type 26 frigates, specifically designed to detect, track down and combat submarines, will start in 2030. Now, the European Commission President Ursula von der Leyen says the bloc's plan to accelerate investment in its defence industry will benefit Poland most. The Commission will prepare a roadmap for investing additional defence funds in coming weeks and will discuss that with national governments in October. Joining us now is Suzanne Lynch, Bloomberg's Brussels Bureau Chief. So a number of interesting developments and threads that we're following when it comes to defence around Europe, Suzanne. How significant are these plans on defence and foreign policy?
Yes, I mean, this is the European Commission's flagship defence spending programme. It's €150 billion pot of loans at favourable rates that countries can apply for and use that to increase their own defence capabilities. Now, as you were saying there, Ursula von der Leyen was in Poland yesterday. That's part of a whistle-stop tour across 7 European countries that are closest to the war in Ukraine. She's in Lithuania today and later in Romania. And I think this is about, the messaging here is important. It's about saying to these kind of frontline countries, Europe, the EU is behind you, and also giving that message to Ukraine that Europe's support is still there. Obviously, we've seen a lot of toing and froing over the summer about what's next for Ukraine. We're still waiting to see if there will be a meeting between Vladimir Putin and Volodymyr Zelensky. But in the meantime, the Europeans are looking at ways at how they're going to make sure they continue to build up that defence industry domestically that has been so lacking in recent years.
And of course, I'm sure the defence industry and Europe's intentions towards defence, that's going to be one of the issues that you'll keep front and centre with your new Brussels newsletter. So tell us a bit more about what to expect there.
Yes, we're relaunching today our Brussels edition newsletter, and that comes into people's inboxes, European readers, in the afternoon. And basically, this is a snapshot of what's happening in Europe every day. You know, as we've been discussing there, Brussels is more and more at the centre of geopolitics, trade, economics, that whole transatlantic relationship and Europe's place in the world. So it's increasingly significant, and our Brussels edition newsletter will be tapping into that. The idea is just to give readers an idea, a snapshot of what's happening in Brussels each day, and also highlighting some of those scoops analysis that our team here in our Brussels bureau and across Europe are generating each day. So make sure you sign up for that.
I will. Suzanne, thank you very much. Suzanne Lynch, our Brussels Bureau Chief. And you can sign up to the new Look Brussels edition newsletter at bloomberg.com/newsletters. Now, from a scrappy startup to global media giant, YouTube has constantly evolved over its 20-year history. Bloomberg Originals has taken a deep dive into the platform's legacy and the challenges posed by AI and its biggest competitor, TikTok.
Okay, hi. So, my name is Boxy, and it's been a while since I made a new video.
I first heard about YouTube when I was in high school.
Hey, it's Fred! I went to a party with Daniel, and he kissed me.
Just kind of wondering, what is that?
I have this really vague memory.
They have really long trunks.
I believe it might have been the first YouTube video ever.
It was, and featured trunk enthusiast and YouTube co-founder Javed Karim. And it ignited 20 years of liking, commenting and subscribing. 20 million videos are uploaded to YouTube every day, and the site's estimated to account for about a fifth of all internet traffic. In the US, people spend more time watching YouTube on TV than Netflix, Amazon, or all of Disney's TV networks and streaming services combined. But the world's central repository of video content is now taking a risky gamble, while also facing its first real competition in years.
The biggest threat for YouTube is that someone could come along and do what they did 20 years ago.
And so, with novel threats knocking at its door, can a wealthy, grown-up YouTube still keep its kids engaged?
You're still here.
And you can watch the full documentary, the full story, at Bloomberg.com or on the Bloomberg terminal. Let's stick with the technology theme for this Monday morning. OpenAI is seeking to build a massive new data center in India that could mark a major step forward in Asia for its Stargate-branded AI infrastructure push. Let's bring in Bloomberg's Tom McKenzie with details on this story. Tom, good morning. So take us through the details of this data center.
Yeah, Anna, I think what this story reminds us is the ambitions, of course, of OpenAI and Sam Altman in terms of that Stargate project, but also the growth in terms of what OpenAI has seen in the Indian market. So they are planning, according to our reporting, to team up with a local player to build out 1 gigawatt in terms of data centers, which would be one of the largest, if not the largest, in India, if that's what it comes to. Google, Microsoft have already been building similar facilities to support their AI ambitions and growth in the Indian market. Now it's OpenAI's chance, and they, again, are looking at this size and scope. 1 gigawatt potentially in terms of the size of this data center. They're looking for those local partners. They've seen significant growth in the Indian market. And of course, this builds out, as I mentioned, that broader Stargate push for OpenAI. They're committing about $500 billion alongside SoftBank and Oracle in the US market to build out potentially up to 4.5 gigawatts. They've got agreements that are underway in the UAE and parts of the Middle East to build out data centers there. Now India is in focus, and it could be announced, according to reporting, as soon as this month, when Sam Altman, the CEO, of course, is expected to be on the ground in India.
Yes, and this comes at a hugely sensitive time, doesn't it, for US-India relations? We're just seeing this weekend and into today the Indian Prime Minister in China trying to further links and ties there because of the difficulty between the US-India relationship. So I wonder how this OpenAI story could fit into that.
Well, I think we have to watch for any comment, of course, from the White House, from President Trump himself, whether or not this will be welcomed as an example of trying to align the world to US standards when it comes to AI, or if there'll be some pushback on that, given what you've said, given the 50% tariffs, of course, that the US administration has now imposed on most of those Indian goods as punishment for India's purchases of Russian oil. So I think the Trump administration's response to this will be fascinating. They have been supporters of OpenAI's push to build out that so-called sovereign AI OpenAI beyond US borders. And we had that really articulated in the UAE when, of course, President Trump was himself there on the ground. And we've heard from administration officials they do want the US to be setting these standards globally. And so arguably the India push would be part of that piece. But at a time, as you say, of those tensions between New Delhi and Washington.
Tom, thank you very much. Tom McKenzie on the Tech Beat with the latest on OpenAI and its intentions towards the Indian market. Up next, Bloomberg Markets. That's with Guy Johnson. He'll be taking you through all of the strength that we're seeing actually on European equity markets right now. The Stoxx 600 up by 0.4%. Broad gains, most sectors in positive territory, industrial goods and services on the rise this morning. Guy is back with the markets next. This is Bloomberg.